Hello and welcome back to another video of my Python algorithmic trading course. So far we've explored how you can create trading algorithms for equities, forex, CFDs and options inside of QuantConnect. In this video I will show you how you can create crypto trading bots. But note that if you're new to this series, I recommend starting at the beginning since the previous video lessons are just as relevant to crypto trading as for the other asset types. That said, let's start with a brief theory part before moving on to coding an example crypto trading bot. QuantConnect currently supports crypto trading on Bitfinex, Coinbase Pro, which was previously known as GDAX, and Binance. Furthermore, Kraken will be supported soon. Bitfinex offers 346 cryptocurrency pairs, whereas Coinbase Pro currently only offers 9 pairs. The data goes back all the way to 2014, but since some cryptocurrencies are newer, the availability of data depends on the currency. For a full list of the supported pairs, check out the linked documentation page below. All crypto data uses the UTC time zone. One important thing to note when trading cryptocurrencies is that you must make trading decisions based on the cash book. The cash book keeps track of what kind of currency your portfolio currently holds. For example, if you want to buy the crypto pair Bitcoin Euro, you would need to hold Euro in your portfolio. The same goes for a pair like Ethereum Bitcoin. To buy this pair, you need to own some Bitcoin since you're buying the Ethereum with Bitcoin. But note that you can also just buy cryptocurrencies against USD if you just focus on the crypto USD pairs. To get the amount of a certain coin in your portfolio, you can access the amount property of the cash book of your portfolio. For example, this line would get the amount of Bitcoin that you own in your portfolio. Similar to the add equity and add forex methods, there also exists an add crypto method to add the data of a crypto pair to your algorithm. As always, the first argument here simply is the ticker of the pair and the second argument is the resolution. QuantConnect supports everything from tick, second, minute, hourly to daily resolution for cryptos. As for Forex, the third argument is where you can specify the exchange that you want the data from. Here you can currently decide between Bitfinex, GDAX and Binance. To live trade cryptocurrencies through QuantConnect, you would have to sign up to one of the supported exchanges. You would then have to create an API token and specify this in the live trading setup wizard within QuantConnect. For more details on this, however, check out the documentation page. With that being said, let me now outline the strategy that we will implement in the coding part of this video. The strategy that we will implement is a simple momentum strategy where we try to identify cryptocurrencies with upward momentum and buy them until the momentum fades. To measure momentum, we will use the Relative Strength Index indicator, also known as RSI in short. If the RSI for a given crypto crosses above a certain threshold, we want to buy it, and we first close the position if RSI drops below an exit threshold. The goal of developing and backtesting algorithmic trading strategies is to best possibly model reality so that the results obtained from analysis are actually meaningful. Therefore, you have to pay special attention to removing as many hidden biases as you can. Actually, one of the biggest challenges of backtesting the just described strategy is realistically modeling the universe selection process. One possible way to go about the universe selection would be to simply look at the currently most actively traded cryptos and then use them as the base universe. However, then the results would be heavily biased from survivorship bias since we are not considering currencies that no longer exist or used to be much more popular than they are today. In other words, we are applying a filter to only consider the surviving cryptos from today's perspective. So be very careful when developing your own bots and always ask yourself whether you are unknowingly applying such a filter. For this algorithm, I will add the data for all crypto USD pairs that are supported by Bitfinex. The algorithm will then look at the 30-day average daily dollar volume and it only adds those cryptos to the current active universe if they have sufficiently high enough dollar volume. Only for these cryptos, it then looks at the RSI for potential momentum trades. I hope this brief explanation makes it clear what the algorithm that we will code next is supposed to do. If you haven't already, I highly recommend creating a free QuantConnect account so that you can code along. Inside of QuantConnect, we'll create a new algorithm inside of the Lab tab. As always, we will start by implementing the initialize method. Firstly, I will set the start and end date for the backtest to the beginning of 2019 until 2021. Note that depending on which cryptocurrencies you want to trade, the available data might be limited. After that, I will keep the starting cash balance to be $100,000. Before we move on to creating some helper variables, let me set the free portfolio value percentage to 5%. Doing this will ensure that always at least 5% of our portfolio will stay in cash, which can be useful if you want to have a cash buffer for your portfolio. Now, we'll create 4 variables that will store some parameter values. The first is called position size USD, and this is where we specify the amount we want to allocate to a single position. Here we will go with $5,000. The next 2 parameters will hold the entry and exit threshold for the relative strength indicators. We will use 70 as the entry threshold and 65 for the exit. This means if RSI rises above 70, we enter, and we first exit if it falls below 65. Last but not least, we specify the average daily dollar volume that we will use to filter out illiquid securities from our active universe. Here, I will go with a value of $1 million. Note that all these values are chosen quite arbitrarily, and you could definitely try out different ones if you want to. However, note that over-optimizing them by backtesting and adjusting them over and over again is the quickest way to end up with a useless overfit algorithm. Next up, we want to add the data for all available crypto USD pairs. For this, I created a list with all these crypto pairs available on the Bitfinex exchange. If you're coding along, you can copy this list from the description box below. Note that there also is a link in the description box to copy my entire finished code, but in my opinion, coding along leads to a better learning experience. We now want to iterate through this list and add all the data for these tickers. However, since we want to access certain properties of all these tickers later, it makes sense to create a custom class for this. So let's do that first. We will call this class pair, and we will start by implementing its Python init constructor. As arguments, the constructor will take our algorithm, a ticker, and a minimum volume, which we'll use to determine whether or not we want to invest in this pair. Firstly, we now want to add the data for the ticker. We can use the add crypto method to accomplish this. The first argument is the ticker, the second the resolution, and the third is where we specify the Bitfinex exchange. Next up, we want to create a RSI indicator for this symbol. To create an RSI indicator, we can use the RSI helper method and specify the symbol, period, type of moving average, and resolution. I will go with the most common 40-day RSI, but feel free to try out different values. In the next step, we want to create an indicator that keeps track of the average daily dollar volume over the past 30 days. For this, we will use the indicator extension that multiplies 2 indicators together. The 2 indicators that we want to multiply are a 30-day simple moving average of the crypto's volume and a 30-day SMA of its price. With that, this volume variable should now keep track of the 30-day average daily dollar volume. Last but not least, we save the past minimum volume argument into a class variable. Generally, it is good practice to group things together that belong to one ticker by defining a class such as this one. Before we head back to the initialize method of the actual algorithm, let me create a method with the name investable. As the name implies, this method should return true if the crypto pair is investable. We define this to be the case if the average dollar volume exceeds the minimum volume threshold that we passed when initializing the pair object. With that being done, let's now head back to the initialize method of the original algorithm class. Here, we can now create a list saving all these custom pair objects by iterating through the lists of the tickers that we specified earlier. After that, we set the Bitcoin USD pair to be the benchmark of this algorithm. Furthermore, we set the warm-up time for this algo to be 30 days, since the indicators that we used require this. After that, we are now done with the initialize method. This means all that's left to do now is implement the onData method, where the actual trade decision making will take place. In the onData method, we will iterate through our pairs list. The first thing that we want to do is check if the RSI indicator for the current pair is ready. We do this by checking the isReady attribute of the RSI. Next up, we save the symbol as well as the current value of the RSI of the given pair into a local variable, since we will need these multiple times in the next few lines. In the remainder of this for loop, we want to differentiate between two cases. The first being that we already are invested in the current pair. We can test this by checking the invested property of our portfolio. If we are invested, there are two conditions that would lead to us wanting to close the position. Firstly, the average volume of the pair might have fallen too low. We can check this with the investable helper method that we defined in the custom pair class. In that case, we liquidate the position. Otherwise, the RSI might have fallen below our exit threshold, which we can check with a simple comparison. In this case, we also use self.liquidate to close the position. After that, we jump to the next iteration of the for loop, since the rest is irrelevant for this case. So in the remainder of this loop, we can assume that we do not have any active position in the given pair. Therefore, we want to test if the RSI is above its entry threshold. However, we only want to do this if the volume of the pair is high enough, which we once again test with the investable helper method. If it's not, we continue to the next iteration. Otherwise, we test if the RSI is above its entry threshold and that the remaining margin in our portfolio is above the desired position size. If both these conditions are fulfilled, we open a position using the self.buy helper method. As the position size, we need to divide the position size in USD by the price of the crypto pair. With that, we are now done coding this crypto trading algorithm. So let's now click on Build and Backtest to look at its performance over the backtest timeframe. As you can see, this seems to be a quite volatile strategy, which shouldn't be too surprising considering that it trades very volatile cryptocurrencies. Until the end of 2020, this strategy pretty much only breaks even, and most of the profits come after that. Here it is important to note that it is very easy to develop a crypto bot that performs incredibly well in backtesting, since the crypto space has gone through one of the biggest bull markets ever. Just for reference, you can look at the Bitcoin benchmark chart and see its incredible bull run. In general, it's not hard to develop a profitable bullish strategy in a strong bull market. However, as soon as the market environment changes, most of these strategies would not work anymore. So try to keep this in mind when developing a crypto trading bot. Besides that, this strategy likely still falls prey to survivorship bias since we only consider cryptos that are currently supported by QuantConnect and Bitfinex. This list likely would have been different a few years ago. Another interesting chart to look at is the exposure chart, which allows you to see the percentage of your portfolio allocated to various long or short positions. Here we can see that most of the time the exposure only was about 5 to 10% of our portfolio, which equates to 1 to 2 positions, since each position is worth about $5,000. Just once in a while the exposure jumps up to between 30 and 50% for a short period of time. If you want to check out this report and my code in more detail, make sure to use the link in the description box below to clone the code. That said, I hope you enjoyed this video and learned a lot. If you did, make sure to smash the like button, subscribe and turn on the notification bell. Thanks for watching.